And time now for Smart Money. Let's check in with Fox 40's financial analyst Keith Springer this morning. Good morning to you, Keith. And we're talking about jobs numbers. Have they been released just yet? And look at that. We're up 76 points.
Up 76 points because of the job numbers. They were just out literally minutes ago, Bethany. We had 9,000 decrease, which is better than expected. They expected a decrease of about 1,000. So that shows that maybe we're getting a little firmer footing in employment. So hopefully it's a step in the right direction.
Hey, you had given us a little information earlier this morning that I found really interesting. And one of the things I like about you, Keith Springer, is you really follow demographics to try to forecast where the economy might be going. There are more people that are moving, that are picking up their households and going somewhere else, and that's a new trend for us, right?
Yeah, that's big news because people need to be able to sell their home in order to take new jobs. That really will help the job market. And when people can sell their homes because prices are too low or they're stuck in a city, even though there's a job waiting for them, that hurts the job market. And that has really been affecting the housing market the last 3 or 4 years. So you can see why the Fed and the government pay such attention to the housing market, why interest rates are so low, why they're really trying to keep housing market booming so they can get these people moving and taking these jobs around the country and able to sell the homes that they're in.
Okay, one last quick thing. We're getting just a few days away from the election now. Does the market tend to kind of start to hold its breath at this point? Do people, does it impact it at all that it's just ahead?
It definitely does. There's a lot of people who are on the sidelines, but we've got to remember about a month ago, Romney was not really considered a contender. Obama was way ahead. After the debates, Romney became much more of a contender. So it's my belief that the market has been going down or fluttering the last 2 or 3 weeks because if Romney gets in, we've got to remember he has already said he would bring in a guy named John Taylor to replace Bernanke. John Taylor does not believe in quantitative easing or stimulus. So if we do get a new Fed chairman who doesn't believe in stimulus, that's no more printing money, no more quantitative easing, and regardless of what you think for the long term, it would hurt the economy and the stock market in the short term, and that's why people are a little nervous right now.
All right, thanks, Keith Springer. We appreciate it, and if you have any questions for Mr. Springer, just like yesterday when he sat here on the couch and answered your questions, maybe he'll answer yours next time around. Send your emails to money@fox40.com or call him up during the day at 925-8900.